Hello and welcome to the Road to Retiring YouTube channel. Today I am looking at Apple. The first thing I like to look at for a stock is its moat. A company's moat refers to its ability to maintain the competitive advantages that are expected to help it fend off competition and maintain profitability into the future. I consider a company to have a wide moat if they have an average compound annual growth rate of over 10% over the past 7 years in the following metrics. 1. Equity growth. 2. Earnings per share growth. 3. Operational cash flow growth. 4. Revenue growth. For Apple, for equity growth this is -6.52%, for EPS growth, 13%, for operational cash flow growth, 5% and for revenue growth, 7%. This is an average compound annual growth rate of 5% across the 4 metrics. This falls under the benchmark 10% I look for, so we will be increasing our margin of safety from 10% to 25%. Additionally to this, I like to see that the management are investing funds efficiently, and I consider a return on invested capital of over 10% to be a good signal for this. Apple's ROIC is currently 57% and has been consistently well above the 10% benchmark over recent years. Additionally to this, I want to see that any long-term debt the management is taking on can be paid off. To measure this, I want a company's free cash flow to be able to pay off long-term debt within 3 years. Apple has $100 billion in long-term debt and $98 billion in free cash flow over the trailing 12 months, so I am confident Apple will not be in imminent financial trouble because of this. Based on this, Apple performs well on most metrics, but as its moat is not as high as I would like, we will keep the margin of safety at 25%, so now we have to consider what price I would buy Apple under. To do this, I estimate the value in 2028 and then calculate what value the stock needs to be now for a 9.5% compound annual growth rate to reach that estimated value in 2028. I estimate this value in 2028 in 3 different ways, using the price over earnings multiple, the price over sales multiple and the price over operating cash flow multiple. The average of these 3 predictions brings a 2028 value of $236, so the average buy value when looking for a 9.5% compound annual growth rate and applying a 25% margin of safety is $103.99, so I would buy Apple stock if it fell under this price. This 2028 value of $236 was calculated based on the following estimates: an earnings growth rate of 8%, share dilution of -3%, revenue growth rate of 8% and an operating cash flow growth rate of 10%. With the following multiples: P/E of 20, P/S of 5.2 and AP/OCF of 20. Comment below to suggest different estimates for these values and I can tell you how this will impact the buy value.